Hello and welcome to Livewise Buy Hold Sell. My name is Chris Conway. To be a successful growth investor, sometimes you have to be early on the big growth stories, because if you're jumping in when everyone else is, chances are you've missed the early part of the rally. So, which under the radar growth stocks are worth paying attention to right now? To help answer that question, I'm joined by Anna Milne from Wilson Asset Management and Blake Henricks from Firetrail Investments. Before we get to the stocks, I just wanted to ask, being early is powerful, but it's also risky. So how, Anna, do you differentiate between those great growth stories versus a stock that's just cheap and not so good?
It's quite hard to decide when something's early if it's in the ASX 200 already. It is quite an established company generally. So sometimes we see earnings growth not through being early, but actually earnings turnarounds. Right. And an example of that could be an ASX 50 company that has been through a really tough time, whether it's matters in their control or outside their control. But if you can catch that inflection point when things is beginning to recover, and if the market is pricing in a grey sky scenario into perpetuity, there can be a lot of alpha in that respect. So we really like those turnaround stories as a matter of getting some earnings growth. So to do that, you meet the management team, you talk to customers, suppliers, get a few independent sources to verify whether things are turning around. But if you're too early, you might be catching a falling knife. If you're too late, you're too late. Yeah.
Blake, what about you? How do you think about that being early versus buying something that you don't want to end up in the portfolio?
Oh, geez, that's the age-old question. I mean, how do you identify these stocks? That's what I always think about. You know, screening for valuation on early-stage stocks, in my view, just doesn't work. Right. Because it's too early. So instead, you know, focus on reading, talking to people, understanding what the business is before I do anything about the numbers, because as soon as you start looking into numbers, that's when you can start anchoring to next year's earnings. Whereas any good, you know, being early stock, the real growth is going to happen in 10 years' time. And so understanding the business rather than focusing too much on the numbers early on, I think is really important.
Yeah. So both of you, it seems like you got to get out there, hit the bricks, talk to people, supply chains, competitors, all that sort of stuff, right?
Absolutely. Yeah. No, for sure. And I think, you know, people often ask, oh, where do I look? And it's like, well, there's just no one answer. If I said, oh, I'll go to this website or talk to this person, it's just not. So activity is actually probably your best friend in terms of finding new ideas.
Right. Makes sense. All right, I've asked both guests to bring along two stocks that they think are a little bit under the radar or have strong prospective growth stories. Blake, I'll stay with you. What's the first one that you're going to pitch for us?
The first one is actually a biotech stock called PYC Therapeutics. Okay. Now, what PYC do is they target genetic diseases where there's just one single gene that's the problem. And so one really common example would be polycystic kidney disease. And so that's where it affects 1 in 1,000 people and the kidney ends up failing. And so what they do, they've worked on an RNA therapy, which became really popular through COVID. Mm-hmm. They've done tests on primates, which is monkeys, and it's worked really well. They're currently testing humans for safety, and that looks like it's going well. And we're going to get, you know, readouts in 2026 and 2027 on whether it's working in humans. So if it does, I mean, to put this in context, the market cap's around $1 billion. Just that kidney disease, we need to be getting annual revenue in terms of that 1 in 1,000 people, talking about a $15 billion market. You know, really exciting. It is risky. We are early. One of the biggest.
Biotech always is risky, so that's okay.
Absolutely. Yeah. But I think in terms of biotech, this is very low risk. It's a very focused management team who are saying, you know, single gene focus. They've done a lot of safety. They've done the primates. It looks pretty good to us. PYC.
PYC, that's a strong start. Anna, what's your first pick?
My first pick is Tuas. Mm-hmm. The ticker is TUA. And I would say it's under the radar because it's not an Australian household name like Telstra or TPG Vodafone. Yep. And it actually spun out during the TPG Vodafone merger in 2020. So it has been around about 5 years on the market. And it's a Singaporean challenger telco. It's gone from strength to strength over the last 5 years. But we think it's really getting its next leg of growth through its recent acquisition of M1. Now, M1 is a bit more of an incumbent, but often what works really well with a telco is if they have a broad strategy across business and consumer and are targeting the high end and the low end of the market. So we see them as really complementary strategies. We think the synergies can deliver beyond what they're promising the market. So the next catalyst for Tuas is the completion of that deal, and then we'll go from there.
So Tuas for you, first pick, Anna. Blake, I'll come back to you. What's your next pick?
For us, it's GemLife. GLF is the ticker. It's a founder-led business that listed on the ASX in July of last year, so it's going to be pretty new to a lot of people. What they do is over 50s living, and the biggest thematic we believe in the Australian market over the next decade is going to be baby boomers moving into that retirement age. And one big unmet need is going to be over 50s living that you're proud to live in. This is really high-end fit-outs, Guggenheim fridges. They're spending $20, $30 million on clubhouses with pools. This is amazing stuff. So it really stands apart from other over 50s living. The second thing it does its own construction. And what that's meant, if you look back through history, while most developers and contractors have been blowing out on costs, these guys have had very, very stable margins, around that 50% on the build. The third thing that makes this business unique and a really attractive investment opportunity is they continue to own the land in the long term. So if you go and move into a GemLife, you'll pay $700,000 for the house on top, and you'll be paying about $200 a week on rent for the land. And so for GemLife today, they've got 1,800 houses already built out and collecting rent on the land. The great news is they've got a pipeline of 10,000. This business is going to get a lot bigger over the next few years.
I hope my mum doesn't mind me saying this, but she's looking at lifestyle communities. So GemLife, I'm going to take that home to her, and she might have to check it out. So sounds pretty good.
She'll have to go up to Queensland because that's where that's the
Needs
special.
To come down to Victoria.
Where else would you want to be when
exactly
you're over
where
50?
The sunshine is. Exactly
I'm ready
right.
now.
Anna, bring us home. What's your second pick?
My second pick is Netwealth. The ticker is NWL. Now, they've been impacted in the last 6 months by the First Guardian Shield fallout. That has now been resolved. There is a line in the sand that is concluded. Mm-hmm. What the recent quarterly showed to me is that the wheels haven't fallen off the stock. They still delivered really strong net flows. They're still at around 50% EBITDA margins, and they're investing for growth, as they should be. So looking at the PE point differential with Hub, we also really like Hub, but it's now at a 15 PE point differential. That's the largest it's almost ever been, and we believe it's just not quite justified. They have this new HIN strategy coming through in the near term, and we believe that it isn't a winner-takes-all market. We believe Hub and Netwealth can both really succeed, taking flows off the incumbents. So Netwealth.
Very good. Ladies and gentlemen, there you have it. Something a little different this episode. It was wall-to-wall buys, but some under-the-radar growth stocks as we plough ahead into 2026. Massive thank you to Blake and Anna for all 3 episodes in this series. If you like this one, give it a like. And don't forget to follow our YouTube channel. We're adding lots of great content every single week.